Excise tax collections from so-called SN products, now redefined to include sweetened beverages (SBs), have raised a total of 269.1 billion pesos in revenues in 2019, which is almost double the 143.5 billion pesos collected from alcoholic drinks and cigarettes in 2015, the year prior to the assumption of President Duterte in office, according to data from the Department of Finance (DOF). Finance Undersecretary Karl Kendrick Chua said that this year, DOF estimates show that the government would be able to raise around 332.3 billion pesos from SN taxes, given that 1. SN products will also cover electronic cigarettes such as heated tobacco products (HTPs) and vaping products, and 2. There are further increases in the excise taxes on alcohol and tobacco products. SN tax collections will be primarily used to augment funding for the implementation of the Universal Health Care (UHC) program, which starts this year. This program aims to provide affordable access to inpatient and outpatient services to all Filipinos, especially low-income families, in step with the ultimate goal of President Duterte to provide a decent life to every Filipino. Higher SN taxes also aim to deter the consumption of unhealthy products to help lower healthcare costs and promote a healthy citizenry. In 2015, the total revenues from SN products was 143.5 billion pesos. Last year, in 2019, the total was 269.1 billion pesos, or 87.5% more. Starting 2020, SN taxes now include the collection of excise taxes on tobacco, alcohol, sweetened beverage and e-cigarette products, said Chua in his report to Finance Secretary Carlos Dominguez III during a recent DOF Executive Committee (EXECOM) meeting. Dominguez said at the EXECOM meeting that the Duterte administration has made history because it is the first government to have pushed more than one SN tax hike bill in the Congress during its term. Chua said the 2020 revenue estimate of 332.3 billion pesos from SN products represent a 131.6% increase from the 2015 collection. By 2024, conservative DOF estimates show that the government would be able to collect about 480 billion pesos. This is a low-end projection, Chua said. The new set of SN taxes comprise Package 2 Plus of its Comprehensive Tax Reform Program (CTRP), which the State Economic Team is pushing to make the taxation system simpler and fairer for all Filipinos and at the same time raise sufficient funds for President Duterte's high and inclusive growth agenda anchored on an unprecedented level of investments in infrastructure and human capital development. Republic Act (RA) No. 11,346, or the tobacco tax reform that was signed into law in July 2019, increased excise taxes on tobacco products to 45 pesos per pack starting this year and 5 pesos per pack thereafter until the rate reaches 60 pesos per pack in 2023. Starting 2024, the tax rate will be increased by 5% each year. This law also introduced a new tax on e-cigarettes such as HTPs and vapor products. RA 11,346 is expected to raise 14.9 billion pesos this year and 125.8 billion pesos by 2024 from cigarettes alone, Chua said. Last January 22, 2020, President Rodrigo Duterte signed into law RA 11,467, which further increases excise taxes on alcohol, HTPs and vapor products, and is expected to raise an initial 22.2 billion pesos this year. Over a 5-year period from 2020 to 2024, the DOF estimates revenues totaling 137.2 billion pesos from this law. Chua said RA 11,467 earmarks 60% of revenues collected from the excise taxes on alcohol products and e-cigarettes to the UHC, while 20% will be spent for medical assistance and health facilities. The remaining 20% will go to programs that will help the government fulfill its commitments under the United Nations (UN) Sustainable Development Goals (SDGs). It also includes a provision exempting the sale and importation of all prescription medicines for high cholesterol, diabetes and hypertension from the value-added tax (VAT). This VAT exemption would then be extended to include medicines for mental illness, cancer, kidney diseases, and tuberculosis by 2023. Chua said the DOF is studying the revenue impact of these VAT exemptions, as preliminary data suggests the projected revenue loss from this tax break can reach 5.2 billion pesos during the first year of implementation, or a total of 35.1 billion pesos by the end of 2024. With this, the net incremental revenue of the bill is 17.1 billion pesos in 2020, and a total of 102.1 billion pesos by 2024. For fermented liquors, a specific tax of 35 pesos per liter will be imposed in 2020, which will subsequently increase by 2 pesos per liter per year until it reaches 43 pesos per liter in 2024. Thereafter, the rate will increase by 6% every year. Distilled spirits will be taxed with a 22% de valorem tax on top of a specific tax of 42 pesos per proof liter in 2020, which will increase to 47 pesos per proof liter in 2021, 52 pesos per proof liter in 2022, 59 pesos per proof liter in 2023, and 66 pesos per proof liter in 2024. Thereafter, the rate will increase by 6% every year. Alcopops will be taxed similar to the rates for distilled spirits. For wines, both still and sparkling, the specific tax is at 50 pesos per liter in 2020, and will increase by 6% yearly thereafter. HTPs will be taxed 25 pesos per pack in 2020, 27.50 pesos in 2021, 30 pesos in 2022, 32.50 pesos in 2023, and 5% yearly thereafter. A tax of 45 per 10 ml of conventional freebase vapor products will be imposed in 2020, P50 in 2021, P55 in 2022, P60 in 2023. Thereafter, the rate will increase by 5% every year. For salt nicotine vapor products, the tax of P37 per milliliter will be imposed on the first year, an additional P5 per milliliter per year until the rate reaches 52 pesos per milliliter in 2024. Thereafter, the tax will be increased by 5% every year.